Filed your taxes yet? Like most Americans, you likely have or are fairly close to it. Well, here's another question for you. Do you feel that there is a wealth disparity in the U.S.? In other words, are the most wealthy individuals paying their quote-unquote fair share? Some politicians are proposing that the answer to that question is no. We're going to talk about that right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm your host, Anthony Pastore. Thank you so much for joining us. Ted Galgano and Janine Lennon are here in the studio to break down the latest on a wealth tax, a proposed wealth tax. So, Ted, I guess we start with this. A wealth tax is not a term that people are unfamiliar with. It's been talked about and discussed. You know, the rich, maybe they're not paying their fair share. I think the question is, how much do they actually pay? We're talking about the top few percent of people in the U.S. How much are they currently paying in taxes?
Yeah, I mean, to just take a step back for a second, the wealth disparity in the U.S., has increased over the last few years, if not decades for sure, which is resulting in politicians at all levels of government wanting to levy additional taxes on the wealthiest of our nation. With that said, as shown in slide 1, if you look at the second bar to the right, you'll see that the top 1% of taxpayers account for far more tax revenue at 42% than the bottom 90% combined, which is about 26% of all federal income taxes.
What does that mean, actually, that if we, in looking at that chart, it makes sense numbers-wise, but really break it down. What does it really mean for us?
Well, for us, I think, the intention of our report as we looked at it is, how are we really defining wealth taxes? And in this case, what we chose to do is it's a tax on the levy of an individual's net worth. So overall, we're talking about, yes, all assets minus all liabilities, and that's going to capture unrealized gains. And in this case, the big behemoth, capital gains that are realized, that tends to be a large share of people's net worth.
Right. I mean, we all pay capital gains. If you're lucky enough to make gains in the markets and you're selling off assets and buying others, you're paying capital gains. But this is different. It's much more all-encompassing, right, Ted? So how does that fit into the tax code that already exists?
So under the current income tax code, gains have to be taxed in order to be, realized, in order to be taxed. Mm-hmm. Under the definition of a wealth tax, they do not have to be realized in order to be taxed. So for instance, if the value of your home goes up, you'd get taxed on that even if you didn't sell your home year after year if your home keeps appreciating in value.
Right. That's a significant change in the way things are currently done.
Absolutely.
Tax-wise, right, okay.
Absolutely.
Right. And obviously there's some, numbers as far as what salary you might be making to be considered for these taxes. But I know there's more to it than that, Janine, and there's a legality part of it as well. So the question then is, has of course the U.S. ever levied a wealth tax? Because there are other countries around the globe that have done this already. Some would say maybe unsuccessfully, some successfully. It just depends on the data and what you look at. And here's the other part of that question. Would something like this wealth tax violate the Constitution?
Right. Our research leads us to believe a wealth tax on an individual's net worth, including unrealized capital gains, has never been instituted in the U.S. Because the definition of wealth and a wealth tax can be narrowly or broadly defined, the topic becomes confusing almost instantly. While some types of taxes often get labeled as wealth taxes, they're simply income taxes that would presumably tax the wealthy at higher rates and thresholds. Mm-hmm. Notably, there's a case under review by the Supreme Court which may impact the degree of which a wealth tax has legal footings in the U.S. going forward. The matter being adjudicated is whether the 16th Amendment of the U.S. Constitution authorizes Congress to tax unrealized income. Without getting into too much detail, the plaintiffs, Charles and Kathleen Moore, challenged a one-time tax on their foreign investment of a corporation, arguing that they did not realize any gains and should not be taxed. And we expect this court to issue its ruling by the end of June.
Wow, it's interesting. Yeah, and I guess we're going to be waiting to see what they decide to do. Obviously, there's a lot of political ramifications in there as well, but also, there might be a lot of people fighting for it, fighting against it, but the Supreme Court will ultimately have to make that decision. So Ted, the Organization for Economic Cooperation and Development, the OECD, they've done some studies that show a decline in the levy of a wealth tax by other countries. I kind of alluded to that a second ago. At its peak, somewhere in the 90s, there were 12 countries that had a wealth tax, and now there's something like 4. What are some of the biggest challenges that you've seen in that study for these other countries that did implement that wealth tax?
Yeah, so one of the most complex challenges to implementation is how do you properly value the assets? So, for instance, what's an individual's art collection worth, right? Some of these unique pieces haven't traded in decades or longer. How do you value that? What is a privately held company worth when you don't have stock trading publicly that easily tells you what the value of that firm is? So certainly, those are complex issues, along with who's responsible for valuing the assets, right? Whose responsibility is that? How accurate is it? Those are just a few of the very complex issues that run into immediately off the bat with this.
Yeah, it sounds like there's a lot of moving parts there. So I guess if you look at the countries that have ceased having a wealth tax, what were some of the reasons why you saw that they stopped doing it?
Kind of fell into 3 main buckets, I would say. One of which is it's very costly and complex to audit and monitor compliance with the wealth tax. Secondly, there's concern over capital flight, whether people and/or assets are going to flee to lower taxing jurisdictions. And finally, the ability of the tax to generate significant revenue tends to be overstated, and therefore it's just not worth the effort in the end.
Yeah. I mean, if you look at just a quick example, during the height of COVID, a lot of the billionaires were fleeing from high tax states like California and New York, and going to lower tax states like Florida and Texas. Certainly that's not a wealth tax, but we know that the taxes in those states are lower than what we pay here. So you could just see the very quick sampling of what that could be like, of the fleeing to other sort of safe zones for taxes if they start to tax the wealthy.
Exactly.
Yeah. Janine, what are maybe some last-minute things to share, especially when it comes to potential implications for investors?
Yeah, the levy of a wealth tax in the U.S. could result in various possible taxing schemes. While it appears unlikely to be enacted at this time, the idea of imposing a wealth tax on unrealized income appears to be gaining momentum in the U.S., and investors should just remain aware of the possible implications.
Right. Interesting. Yeah, I guess we'll wait for the Supreme Court in June and then see how it all shakes out. A lot of things to, you just mentioned just the cream on the top of the bottle there. I mean, there's so much that has to be considered here.
It really is a complex issue, as we discovered when we started looking into writing this piece.
Yeah. Thank you both for joining us in this conversation.
Thank you.
We'll continue once we hear from the Supreme Court in June, so we'll have to get you back.
Thanks.
All right, Janine and Ted, great. Thanks again. Good to see you. And for more information on this topic, plus a lot of others from our Chief Investment Office, visit our website at ubs.com/views. Plus, you can follow us all on social media, UBS as a firm, plus UBS Studios. You can follow our Instagram channel at UBS Trending. Lots of great content there you're not going to find anywhere else. And as always, please make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon.